In this chapter, we'll be discussing about liberalization of 1991. That's a very important landmark event in India's economy. So you should be aware of this because we are discussing about FDI and foreign investors. It's a very good time to discuss about the economic liberalization of 1991. So before discussing liberalization, you have to know something about license Raj. That was the practice that used to be prevailing earlier. It's right now not there, but prior to 91, there existed a system called which is referred to as license Raj or permit Raj or quota Raj. All these terms you will be hearing about. So this referred to a situation where government control on industries was excessive. Government exercised excessive control on industries, like how much companies should produce, the quantity they should produce, okay, the price of commodities. There was excessive control. It was not a free market as it is presently right now. Okay, so say a company wants to increase production. Say a cement company wants to increase production from 10 tons to 15 tons. Then it has to obtain a license from government to do that. Okay, right now today we don't have that situation, but this was the situation prior to 91. And because of this, there was a lot of corruption because companies used to pay bribes to obtain licenses. And also quota meant not everybody who applied got license. So say for example, government decided for this year the total cement production should be 1000 tons. Say now it's October now, and already the total of all production capacity of existing cement units is 950 tons. So only 50 more tons can be given licenses. So there used to be competition for this 50 tons. Sometimes bribes were given, and sometimes even if a company did not require it, they used to buy the license to prevent the competitors from getting the license. So all these sort of things used to be existent prior to 91. Then in 1980s, it started in 70s, but it worsened towards 80s. There was this balance of payment crisis. The situation mainly arose because of the current account deficit. It was financed from borrowings from abroad. Also, there was this Gulf War, Iraq's invasion of Kuwait, and the Gulf War followed in 1990. So all this deteriorated the situation. And by 91, the situation was very critical. The Indian government was close to default, meaning we were not in a position to pay the debt which we borrowed from other countries. That was a very precarious situation. Foreign exchange reserves were very low. They came down to just 1.2 billion. Okay, and by June 91, it dropped to half of that. Such was the low. Such low was the position. The forex reserves that was sufficient to cover only 3 weeks of imports. Okay, India imports a lot of mainly crude oil and other commodities. Okay, so that forex reserves we had only sufficient to import 3 weeks of essential commodities. So that was very a dangerous situation. So the situation became very unmanageable, and with imminent default, we are about to default. So then government had made a decision to approach IMF. IMF is International Monetary Fund. So IMF agreed to help, but the price that we had to pay was in return was abolishment of license Raj. That was the condition stipulated. So the balance of payment crisis was over by 94. The foreign exchange reserves by that time has increased to 15 billion. So how the government saved the economy that day was very important. That was through liberalization. That is the term that is used. Liberalization of the economy. Liberalization means relaxing the rules for the business. Okay. So the 91 budget was very important. That along with the industrial policy together allowed private investment in almost all sectors. Another point was RBI allowed commercial banks freedom to charge interest rates above the floor level based on their risk perception. The rupee was allowed to depreciate close to 10%. So exchange value vis-a-vis the dollar was at 23 rupees. And to reduce expenditure, government expenditure on subsidies, certain fertilizer prices were hiked by 40%. Like prices of sugar offered to PDS, that is the ration shops, that was increased. LPG cylinders price were also increased. Petroleum prices were increased. Okay. Exchange control regulations were liberalized. FERA. Earlier there used to be this FERA, that is Foreign Exchange Regulation Act, that was liberalized, and now we call it FEMA because there is no more regulation, it's more of a management. The duty structures were rationalized. The peak customs duty was reduced from 220% to 30%. Indian economy was open to foreign goods. So the overall goal of all these steps was to reduce government interference and to allow market forces to determine the economy. So in this context, you also should know the political situation of that period. In 91 June, Mr. Narasimha Rao has assumed office as the Prime Minister, and he appointed Dr. Manmohan Singh as Finance Minister. Manmohan Singh was, prior to that, had a lot of experience. He was a renowned economist. He had vast experience in serving key positions such as Chief Economic Advisor in the Ministry of Finance, Secretary in the Finance Ministry, Deputy Chairman of Planning Commission, Advisor to the Prime Minister on Economic Affairs, and also Governor of RBI. So he had vast experience, and together the government has along with the finance minister, the prime minister have made some critical decisions within 1 month. So gold from the reserve assets of RBI was shipped to raise $400 million. Please note that normal course of events will not sell gold. You might be having gold in your house. Normally you will not sell gold, okay, unless as a last resort. So the situation was so bad at that time that the Indian government had to ship that gold to get money, $400 million. And the government has announced the statement of industrial policy on 24 July 91. The budget also announced far-reaching decisions. So what you can argue that any government that came to power in 91, because elections were held in 91 and Congress won then, any government could have made the same decision of liberalization, because really there was very little choice, because we are close to default. The default was imminent. Forex is also so low. So any government, you could say, would have done the same thing, but because the world was also no longer willing to lend to India, default was imminent. But where the credit has to be given to the government of that day was those tough decisions could be taken only because the prime minister and finance minister were decisive. Okay, there was an article written in Forbes magazine where they said there was no political support for the 91 budget. Only 2 Congress MPs backed it at the Congress parliamentary party meeting, while 58 were against it. The finance secretary, the chief economic advisor, all these were against these changes. So were the Ministry for Industry and Minister of State, and many vested interests protested loudly, but the Prime Minister backed those measures and pushed them through. So that is where the credit for the government of that day has to be given. So for more details, you can read the article that the link is provided, Business Standard. The article is titled 2 Months That Changed India by A.K. Bhattacharya, that you can go through when you are free. So in this chapter, the questions will be repeated. What is license Raj? What was balance of payments crisis that India faced? What were some factors that contributed to the balance of payment crisis? What is meant by economic liberalization of 91, or what steps did the government take to save the economy from the balance of payment crisis? That's a very important question.